Hello, I'm Don Tapscott,
And I'm Alex Tapscott.
and this is What's on Tap. Alex, the big news over the last weekend, crypto markets swooned. And we've always said that the markets don't determine what happens with blockchain in the enterprise. And if anything, the growth of the market over the last period has been a reflection in the growing interest in blockchain. But what do you make about the crash? Or probably shouldn't use that word crash, but for sure we had a big dip. What caused it? What does it mean?
Yeah, there was a number of factors leading into it that I think helped to accelerate the sell-off. Comments from Elon Musk about Bitcoin's energy usage, which we talked about last time, continued into that weekend, and I think caused a lot of uncertainty within retail investment circles, which generally I think are too over-leveraged still. And so when you have forced selling, it can cause pretty steep sell-offs in the price. It's funny, though, if you looked at the price of Bitcoin on Friday and then on Monday, it didn't change very much. So just remove the weekend from your mind and all is well in the world. And already today, things are sort of back to an equilibrium. I mean, ultimately, the price is clearly very important. The price of Ether reflects the demand for ETH, for the native currency and applications in the ecosystem. Bitcoin reflects the confidence in the asset class as a store of value and as a medium of exchange. So the two are clearly very deeply intertwined. It's also worth noting that during that period where things sold off, we had hit a number of big milestones. Stablecoin dollar values went to $100 billion for the first time ever. Dapper Labs, one of the big NFT providers, hit 1 million users. We saw news out of the Federal Reserve that they're exploring a central bank digital currency. So progress marches on in spite of any short-term gyrations in the price. So it's not something that particularly concerns me.
Yeah, and I think Elon's overinflated influence is probably ephemeral. I mean, will come to a stop at some point. It's sort of a sign of the immaturity of the market that somebody can do something, say something, and the market fluctuates so radically. But ultimately, in my mind, the value of these platforms will be determined by their functionality, kind of roughly like the stock market works, where I'm sure there are lots of ups and downs and volatility, but underlying value does determine the price of stocks. What about the whole energy thing? I know Elon's jumped into that, summoning Bitcoin miners to come together to reduce energy use. You, of course, have been deeply involved in this project through 9 Point Partners and your moves to create the first carbon neutral Bitcoin ETF. But what's been going on with energy? Is this an issue, and how's it going to get resolved?
I think your point about Elon's outsized influence is important here. And there was news over the weekend that Elon had convened this group of North American miners. So these would be, miners that aren't in China, they're in the United States and Canada and elsewhere, to discuss ways to put mining on a more sustainable path. On one hand, laudable for sure. I think it's important that miners look to decarbonize the mining process, but a little bit troubling in the sense that Bitcoin is supposed to be decentralized, and the idea that there is a cabal of miners who are going to, exert their collective influence over anything should be anathema to anybody who, believes in the power of decentralization. We already had a period of time where China was responsible for a huge amount of Bitcoin mining. That is starting to change for a lot of reasons. And that was a period when things were really centralized. So we don't want to go back to that, even if it happens to be, amongst a group of companies or entities in the West. Again, I think that's just generally overstating the influence of Elon and this group of miners. They still represent a pretty small part of the overall global hashing power. And as we've said before, Bitcoin needs to get to net zero in order for it to achieve its potential. And that can happen in a number of ways. Decarbonizing the mining process, putting it on renewables is the most important way. But another very important way is for industry participants to offset the carbon footprint of the Bitcoin that they own. And that's something that, as you pointed out, my firm 9 Point has taken the initiative on. We recently announced that we are offsetting 100% of the carbon footprint of our flagship Bitcoin ETF which has, I think, somewhere around 150, 175 million US dollars of Bitcoin. So that's a big step for us, and it's an expense to us as well. But it's the right thing to do, and we know in the long run it's going to help to draw in new potential investors. We hope it will, at least.
Yeah, there's some other interesting solutions too. Announced this week, BSC researchers are working on applying supercomputing techniques to reduce Bitcoin overall blockchain energy consumption. And of course, we have a shift from proof of work to proof of stake, which uses a lot less energy. So this is all moving in the right direction. It's certainly not a reason to. This is in the challenge of in the category of implementation challenges, not in the category of reasons why crypto is a bad idea. Although we have an op-ed author from the Wall Street Journal this week, Lee Reiners, arguing that cryptocurrencies should be banned. This is following the Colonial Pipeline hack. The company paid ransom to hackers. And Mr. Reiners says that that the federal government should ban crypto to prevent it being used by criminals. Any thoughts on that extraordinary statement?
It's a common argument that we hear, but the fact that it's common makes it no less absurd. All the data says that Bitcoin is used with less frequency, both in terms of dollar value and in terms of proportion for criminal activity than dollars are. So number one, Bitcoin is not more favored by criminals than any other medium of exchange. The US dollar continues to reign supreme in the criminal underworld. But more importantly, plenty of technologies are used by criminals. How did the hackers get in touch with Colonial Pipeline? Did they use the internet? Did they use a PC? Did they use a cell phone? Were they communicating on Signal? Did they have a Telegram group? Were they using WhatsApp? I mean, it's absurd to suggest that a technology is responsible for the actions of criminals. And as we've pointed out before, there are certain parts about Bitcoin that I suppose make it somewhat useful for criminal activity, the fact that it's a digital medium of exchange. But a lot of people mistakenly characterize it as an anonymous or even pseudonymous medium of exchange, when we know from experience with our collaborators at the BRI and elsewhere that there's a long track record of governments actually using the blockchain as a way to track down criminals. So the jury it's still far from clear whether or not Bitcoin is even a better tool, when it's quite clear that plenty of other technology tools do enhance the power and the reach of criminal actors. So, a classic misconception about Bitcoin, one that needs to be swatted down with great vigor. And I think that the data is on our side in that respect.
Thank you. In announcements from the BRI, of course, last week we announced our global expansion into Africa, partner being Standard Bank, that is rolling the Blockchain Research Institute into 5 countries in Africa. In the Middle East, 9 countries there. And I note that the BRI Middle East is very active all of a sudden on social media and is gathering quite a following. And BRI Korea through our partners in Bosagora. I had several calls with Bosagora this week, and they're announcing some very exciting plans to use blockchain technology to pretty much reinvent the model of government and democracy, moving us away from an old model of you vote, I rule, right? The one-way model of democracy that we've had for a long time, where citizens are inert, to a much more interactive model of democracy, where there's a culture of public deliberations and citizens are quite active. And we'll be reporting on that a little more in the future. I'd also mention to everybody, June 1st, our new book will be, the new book called The Platform Revolution will be available for pre-order on Amazon.com. So Platform Revolution by this time next week will be available. Alex, any other thoughts? I know we got a lot going on this week and we got to get back at it.
No, it's been a great week. You mentioned the Middle East. Dubai just announced that it's planning on introducing its own central bank digital currency at some point, a trend that we've talked about a lot. So just another reminder between the Korean initiative and what's happening in the Middle East and elsewhere, just how global this really is. And in fact, just one other data point I saw, which is that Africa continues to lead the charge globally in Bitcoin adoption and peer-to-peer payments. And it's no surprise given the fact that many people are unbanked or underbanked and that they need to move money globally throughout the diaspora. So again, a great sign of how global this is and how robust things are in this industry.
Maybe just one quick topic additionally is that in our research, we found that not just for crypto and digital platforms, but for enterprises, the number one impediment in surveys that we've done to this whole thing moving forward is government regulation. At the good end, lack of clarity and regulatory uncertainty, as it's called. And at the bad end, government's taking draconian actions to just kind of ban stuff, as
Yeah.
Mr. Reiners in the Wall Street Journal has proposed. And I note that China, of course, this week took big steps to crack down on Bitcoin mining, and Iran has banned all crypto mining, at least for the summer. So why don't we just end with a couple of thoughts on this one? Governments, I mean, sure, you want to protect consumers, you want to protect investors on the one hand, but you need to get the balance right so that you encourage innovation. And if it's really true that this is the internet of value, this historic new innovation that's going to change the deep structure and architecture of the firm, will transform many industries, can enable all kinds of prosperity and positive things in society like social inclusion and valid land titles and radically reduced fees in the financial services industry. You don't want to crush all that too. I mean, any final thoughts on this?
Yeah, that's absolutely right. I mean, what Iran and China does shouldn't really have much bearing on what we do here in Canada, the United States, in Europe. They're different regimes with different priorities. In China, there's a concern around Bitcoin just generally because the state doesn't control it. And so obviously they're not keen on it. Iran, it's a bit more complex, the issues. One of the reasons why they try to throttle Bitcoin mining in the summertime is that Iran gets really hot and they need air conditioners to work in people's homes, and they don't want miners using too much of the local power grid. That's an issue that's not something that we really worry about here in North America. But the bigger point is this is more than just it is an asset class, but it's also an innovation in technology that needs to be embraced by governments and supported along the way. And I think that there are signs that it could go any direction at this point. I think by no means is the path clear for how governments will react. I think that there's lots to be encouraged about, frankly, in the United States with the appointment of Gary Gensler and the changes to the rules at the bank regulators and the interest of the Federal Reserve and the central bank digital currency. And these are all great signs, but we need to continue the fight for sure.
Okay, that's what's on tap for this week. We'll see you in a week.